Welcome to the XFO Intelligence Podcast. Today, we're examining a fundamental shift in the global order. We stand at a pivotal moment in the history of global finance, one that's going to define the flow of capital and, well, power for decades to come. For generations, the US dollar has been, the undisputed king of currencies. But its singular dominance, it's now giving way to a more complex, sort of multi-layered system that is transforming right before our very eyes. Through our deep augmented thinking analysis, where we synthesize vast data streams, geopolitical intelligence, and economic patterns, we can see the clear contours of this new financial landscape taking shape. This isn't some forecast of a distant future, no. This is happening now, as of October 17th, 2025. So, let's first address the biggest change here, the end of singular dominance. The long-held quest for a single, ultimate reserve asset, that's driven international finance for nearly a century. Our analysis reveals this search is, well, it's now obsolete. Between now and 2028, we project that no single asset is going to dominate global reserves. Instead, a tiered ecosystem is emerging. The US dollar will remain the primary transaction currency, but its share of global reserves, it's projected to decline from about 57% down to a range of 52 to 55%. So it's still the workhorse, absolutely, but it's no longer the only horse in the race. At the same time, gold is experiencing a renaissance. It's re-emerging as the ultimate non-political anchor, rising to 20% of strategic allocations in central bank portfolios. Then there's the new frontier, digital assets, led by Bitcoin. They're establishing a beachhead as a form of digital gold, projected to reach about 5% in progressive portfolios. And finally, you have multi-currency blocs forming as a conscious diversification strategy, and they're capturing nearly a quarter of all reserve allocations. Let me be clear, this isn't a collapse of the dollar system. It's an evolution into something more resilient, more adaptive, and, frankly, better suited to the fragmented world we now live in. But why is this happening? Why is it inevitable? We've identified three powerful interlocking forces driving this whole reconfiguration. First, geopolitical fragmentation. This has become the new normal, right? The weaponization of financial infrastructure, particularly through sanctions, has triggered a global search for alternatives. Central banks in emerging economies, they're not just diversifying anymore, they're building insurance policies. They now view gold accumulation as a strategic necessity, with annual purchases already exceeding 1,000 tons. They aren't abandoning the dollar, but they are preparing for a world where they can't be cut off from it. The second force is technological disruption. This is reshaping the very architecture of finance. Digital assets, once dismissed as speculative toys, are maturing. The establishment of a U.S. strategic Bitcoin reserve in 2025, that was a watershed moment. It signaled a major shift in official thinking. Alongside this, you have stablecoins that have grown into a $312 billion bridge connecting the old world of finance with the new world of digital money. And the third driver is ongoing monetary experimentation. Nations around the world are grappling with just unprecedented debt levels. With U.S. debt to GDP exceeding 130% and similar pressures globally, raw confidence in pure fiat systems has eroded. Gold's resurgence represents a back-to-basics movement, a flight to tangible safety. Meanwhile, digital currencies offer a potential escape velocity from the constraints of these legacy systems. So, what does this new architecture actually look like? By 2028, we project a pretty clearly defined four-tiered hierarchy will stabilize. Tier 1, that's the transaction and invoicing layer. Here, the US dollar remains the workhorse for global trade, though its dominance is lessened, right? To maintain this position, initiatives like a digital dollar will be absolutely crucial. Tier 2 is the strategic reserve layer. This is where gold reclaims its historical role as the ultimate store of value during uncertain times. Yeah? Central banks, they no longer see it as a relic, they see it as essential geopolitical insulation. Tier 3, the diversification pool. This consists of a basket of major currencies, the euro, the yen, the pound, and increasingly the renminbi. This layer provides a deliberate buffer against dollar concentration risk. And finally, Tier 4, the digital innovation layer. Here, Bitcoin and other digital assets serve a dual role, as a bet on future technology and as a non-sovereign store of value. Okay, this is particularly attractive to younger, more dynamic economies and institutions. So, what does this all mean in practice? For policymakers, the imperative is to build systems that can navigate this complexity. For central banks, it's a delicate rebalancing act. Our analysis suggests optimal allocations of maybe 15 to 20% in gold, with smaller but meaningful positions in digital assets. And for investors and corporations, look, the old playbooks are obsolete. Hedging strategies and treasury management built around dollar dominance, they require a fundamental update for this new multi-asset reality. The path forward requires a new mindset. The most successful participants in this new environment will be those who embrace three key principles. First, diversity over purity. The quest for a single perfect asset is a fool's errand. Yeah? Resilience comes from holding complementary assets that serve different functions. Second, adaptation over prediction. In a system this complex, the ability to respond quickly matters more than trying to achieve perfect foresight. And third, see technology as an enabler, not a panacea. Digital infrastructure makes this multi-currency world operable, but it doesn't eliminate fundamental economic realities. The great reconfiguration of global reserves represents both immense challenge and incredible opportunity. For those prepared to navigate this new landscape, it offers the promise of a more resilient financial system, one that reflects the multipolar, technologically advanced world we actually inhabit. The era of simple answers is over. The age of sophisticated portfolio management across asset classes, technologies, and geopolitical realities has begun. Now, here's a question we'd like you to think about. As individuals and as businesses, how are you preparing your own financial strategies for a world where no single asset is king?